Chris, very good to see you. This video is for anyone who is inheriting a Roth IRA. We're going to break down everything you need to know. A Roth IRA allows you to save for retirement with after-tax dollars. That means you pay taxes on your contributions now, but your withdrawals are tax-free in retirement. So, Chris, what are the benefits of inheriting a Roth IRA?
Well, if it's been inherited from your parents, and they established it 5 years ahead of time before they passed away, is it's income tax free. So, I mean, that's obviously a wonderful benefit because as a beneficiary, you may be in a much higher income tax bracket than what your parents or grandparents are. So anything you can get tax free is wonderful in these days.
Of course. So what I want to talk through now is known as the 10-year rule. And this gets a little bit complicated, but what do we need to know about it?
Yeah, so the 10-year rule came about in the Trump administration when they changed how IRAs are distributed to typically non-spouse type beneficiaries. And so there's what's called an eligible designated beneficiary, which would be like a spouse.
Yeah.
And a spouse can simply take a Roth IRA and put it into their own Roth IRA. If you're just a designated beneficiary, like a child or a grandchild, then you're going to have to empty that IRA account within a 10-year time frame. And to make it even a little more complicated, you have to take a little bit out every single year in most cases. Okay. But by the end of the 10th year, it's got to be completely empty, Aaron.
Yeah, we know Uncle Sam wants his money back. I want to, though, talk this through because I think a lot of people will say, well, Chris, it doesn't affect my income taxes. I don't have to pay taxes on those distributions. Why does it even matter?
Well, the longer that you can defer paying or emptying an account that's income tax free could certainly be a long-term benefit to the beneficiary, especially if you wanted to invest in, different types of long-term growth vehicles as well.
Okay, so I know you have some good tips for anybody who is going to be inheriting a Roth IRA. And your first tip is understand what kind of beneficiary you are.
Yeah. Are you an eligible designated beneficiary, like a spouse or somebody who's not 10 years or more older or younger, than the person that passed away, like a sister, for example, or are you just a regular designated beneficiary? Almost call that a normal beneficiary, like a child or a grandchild. And then what are the rules that apply to you there? So there's a set of rules for eligible designated beneficiaries and a set of rules for just designated beneficiaries, Aaron.
And then next you say invest the money wisely.
Certainly. And, in a lot of cases, because it's an inherited account, oftentimes the child, the grandchild, even the spouse, of course, may want to keep that more conservatively invested because it's still an attachment to, a parent or a loved one, if you will, and they may not want to be incredibly aggressive with that money.
And clearly, because this one seems a little bit like advanced math to me, your last tip is to get some professional help.
Yeah, no question about it. And as time has gone on, rules change over the course of time. So there's probably somebody watching this video that says, well, heck, I don't have to take anything out of my my inherited Roth IRA other than a required minimum distribution for the rest of my life. That was before we had the 10-year rule. So, Aaron, even, as an investment advisor with lots of experience, we still pay an IRA technical consultant when we run into issues. And, when did the person pass away? Was it before or after they enacted the new legislation? And it's going to continue to get that way as time goes on, I would assume.
Yeah. You bring up such an important point. The IRS doesn't always make things clear for us. Good points. Chris, so if somebody has questions, if they are going to be inheriting or if they want to bequeath an IRA, tax deferred or otherwise, what's the best way to reach you?
Hey, best way is call Heidi at the office at 866-695-2620. That's 866-695-2620. And then we could sit down with you and kind of look at all the options that are available to you out there and making sure beneficiaries are up to date as well.
Yeah, so important. Chris, thank you very much.
My pleasure, Aaron. Thanks, everybody.
Tune into Chris McIntyre's full radio program and visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.